Boom! What's going on, Investomaniacs? Knight Rider here, and today we've got two companies which work in the athleisure apparel domain, and that's Under Armour and Lululemon, as well as a little side garnish of Nike thrown in. Hey, if you play sports, work out, or follow The Rock on Instagram, you're probably familiar with Under Armour. See, that's his little shoe right here. That's Under Armour. Also, I'm rocking my Under Armour shirt right now, doing a little respect. This is like UPF sun protectant 30 or something like that. That's why I wear it. Not because the brand, because they're the only major brand that offers like UPF stuff that protects you from the sun. So that's why I like it. I wear this like every single day. But that, again, just because you like to use a company's products personally does not necessarily make it a good investment. That's something I try to stress to investors all the time. They come to me, oh, I really like this company. Okay, that's a good starting point, but just because you like a company doesn't mean the company makes money. It doesn't mean the company is growing. It doesn't mean that the valuation is correct. So you always want to make sure, okay, yeah, you want to like the company. You don't have to like the company, but it's nice if you like the company, but then you also have to do your due diligence. So, hey, I love this shirt from Under Armour. I literally wear it every day, but let's see if that actually translates into something that is investable. So Under Armour is an American sportswear company. Under Armour is a popular clothing brand. It's also a major player in the digital domain thanks to its connected fitness platform, which is the largest digital fitness community currently operating. Connected fitness is a particular point of pride for Under Armour, considering analysts were calling for its demise just a few years ago until a major turnaround in 2018 when a $4 million operating profit was declared. This year, Under Armour has been a consistently moving machine with new lines announced and new management implemented. This month, Under Armour announced a new signature golf collection under Steph Curry's name and began looking at patents for an impressive new type of sports tech, shoes that read your blood pressure. The smart shoes are the latest in the long line of techie athleisure products Under Armour is investing in and known for. Last year, Under Armour released their Hover shoes, that's HOVR, their Hover shoes, which track running performance, and earlier this year, the company released Rush, a brand of heated clothing designed to enhance muscle recovery. Under Armour has also announced some new management by hiring former Red Bull executive Sean Eggert to become the Senior VP of Global Sports Marketing. Although Under Armour's commitment to innovation is exciting, the company is dealing with a few roadblocks. Domestic sales this year have been somewhat disappointing, and despite their techie products, surveys have shown Under Armour's popularity has failed to grow with the youth market, unlike competing companies Nike and Adidas. Furthermore, the stock has been highly volatile over the past several years, with the stock price reaching a record high in 2015, then crashing down a whopping 75% by 2017, and another kind of 2 years later, we're up over 115% That's a lot of volatility. All things considered, Under Armour is a strong company with a lot of innovative ideas and a solid foothold in this industry. But athleisure is a competitive world, and Nike and Adidas are currently winning. I will bless an Under Armour investment if you strongly believe in the company and believe it can innovate itself into accelerating growth, which it's currently not doing. I think a Nike investment makes a lot more sense. Under Armour is currently trading at 1,576 PE. Yes, you did hear that correctly. Just turned profitable. That's what happens when companies are barely profitable, right? They have a super high PE. So it's over a 1,500 PE. But here's the thing. Usually companies like that, they're growing the top line pretty solid. But unfortunately, Under Armour only grew its top line 4% in 2018, and this most recent quarter came in at it was like less than 2%, 1.6%. Now, in contrast, and it also doesn't pay any dividend. Now, in contrast, we have Nike, which is trading at a 32 PE. Remember, contrast that to over 1,500 by Under Armour, and revenues actually grew 50% more in 2018. Revenues grew 6% for Nike in 2018, and Nike is also paying you a 1.07% dividend. From a valuation standpoint, Nike is the clear winner. The only reason to invest in Under Armour is because it's such a smaller company than Nike and therefore has the potential to grow a lot more. There's only one problem. It's not growing. The small company, the massively small company, is not supposed to be growing 33% slower than the massively larger company. So it just doesn't make sense. Hey, if they were growing a lot faster, I'd be all over Under Armour. They just don't have the growth. So I think Nike makes more sense. Up next, we've got Lululemon, another popular athleisure wear brand. Lululemon is a Canadian company, Canada, which makes high-end sportswear for less intensive activities like yoga and just general gym wear. However, most women would describe it as really expensive, but makes my butt look really good, so it's worth it. Lululemon is more niche than most athletic brands. They primarily serve women and the high-end market at that, with almost all of their pants costing at least $100, which is a lot more than the competition, or at least in terms of the entry-level prices. Lululemon is currently trying to expand into serving men. However, I'm unsure how many men will be willing to pay $100 for a pair of pants to make their butt look good when most men aren't even aware they have a butt. I never pay attention to my butt. I never like, how does my butt look in these pants? But I do notice how butts look in women's pants. I don't know if girls notice how my butt looks in pants. I know some women are into that. I don't know. Anyway, not really sure how the whole transition or trying to expand into men will go, but even if they don't, it doesn't really matter, because I like the current business with how they're doing with women, and a smaller audience doesn't necessarily make for a worse investment. For years, I thought Lululemon would have to lower its pricing, but I was wrong, and their demographic has remained extremely loyal, and I can see why now. Walk into a Nike store, then an Under Armour store, then an Adidas store, then walk into a Lululemon. Lululemon is so much more warm and feminine feeling. Under Armour stores are distinctly masculine, and Nike and Adidas stores they just feel a little bit more like transactional stores. But then you walk into the Lululemon, there's a more pleasant feeling, a more pleasant experience, and it is more centric around women, and for people who can afford it, that type of stuff matters. Lulu has a very tight hold on the yoga crowd and general gym going women who don't mind the price tag. This brand loyalty has allowed Lulu to expand and market not only clothing, but also lifestyle products that are related to gym and activewear, like dry shampoo, which may not seem like a big deal to us men, but women, as most of you probably know, are super picky about how often they wash their hair and what type of shampoo they use. So having a good dry shampoo for women who are in the gym sweating every day or doing yoga and sweating every day, but they don't want to be washing their hair every day, having a good dry shampoo is nice. So hopefully that will continue to grow. Lulu has made it a point to capitalize on their brand loyalty this year by instituting a loyalty program which offers perks, gifts, and discounts to customers who join for a small fee. That's right, Lulu actually charges a fee to join their loyalty program, which should help demonstrate just how high-end in the market they're going for. Victoria's Secret doesn't charge a fee for their loyalty program. Starbucks doesn't charge a fee for their loyalty program. Both brands loved by women. And in this economy, we have the increasing inequality, right? Some popular high-end brands are doing extremely well, one of those being Lululemon, and we also have low-cost providers who are thriving. Lululemon is performing well this year, and it has some impressive ambitions. The company announced a goal to quadruple international sales over the next 5 years, especially in areas like Asia and Europe. Asia in particular is a wise place for Lululemon to direct their attention given the rising interest in athleisure wear, which has led to big overseas gains for companies like Nike. In the domestic market, the self-care line is generating serious excitement with glowing reviews from magazines loved by women like Allure. I like Lululemon. Until next time, Investomaniacs, may the market be ever in your favor.